the leverage it creates in the system, because MicroStrategy is trading at a huge premium.
Mm-hmm.
That premium is somebody else's arbitrage. And so whether they're buying Bitcoin selling MicroStrategies or buying the options from the convertible note and that are very cheap and selling more, somewhere within that system is an enormous amount of leverage happening.
Yep.
And I don't worry so much about MicroStrategies. I worry about the unwind of the other side of the trade. Because people focus on the MicroStrategies because it's flashy, but this is what happened with Grayscale. Grayscale was trading a huge premium. People didn't realize it was creating gigantic leverage.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Bitcoin's trajectory indicates a possible increase to $150,000, $450,000 within the next year, while the overall cryptocurrency market appears set for significant expansion, potentially achieving a $100 trillion market capitalization by 2034. This assertive forecast, articulated by Raoul Pal, CEO of Real Vision, highlights the significant impact of blockchain technology, even in the face of market volatility. The cryptocurrency market has shown significant strength, propelled by enhanced transaction processing efficiencies on leading blockchain networks and a growing acceptance across various sectors. The involvement of institutional players and the incorporation of artificial intelligence into blockchain applications are driving this growth, establishing a robust ecosystem that is conducive to innovation. The forecast is consistent with past trends observed in Bitcoin's performance, indicating that significant gains typically occur after phases of consolidation. The expected expansion is indicative of wider macroeconomic patterns, such as the influx of institutional capital, enhanced regulatory transparency, and the evolution of decentralized finance, DeFi, alongside non-fungible token, NFT markets. This growth trajectory highlights the critical need for strategic positioning among investors. The increasing interest in Bitcoin as a store of value is drawing significant attention from institutional investors. Meanwhile, Ethereum and various other blockchain platforms offer opportunities for engagement with smart contract technology and decentralized applications. Strategic allocation among high-potential assets, along with a focus on long-term growth, is essential. The convergence of AI and blockchain is significant, as it has the potential to enhance efficiencies in data processing, automation, and decision-making across various sectors. The anticipated synergy is likely to expedite the integration of blockchain-based solutions across various sectors, including supply chain management and financial services, thereby reinforcing the positive market sentiment. And lots of things Raoul Pal discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
Look, it's coming fast because, I've always said, and I think I was the person who invented the term pristine collateral. It's great collateral. So, Of course, if you can lend or borrow it out, we do it in the art market, we do it for any asset that is deemed to be decent quality collateral. So no reason why not. However, we are just creating leverage, and humans love sex and leverage as the two most powerful forces in the human mind for some ridiculous reason.
And if I rephrase that question, does Bitcoin actually need DeFi?
So let's say you're the guy who bought Bitcoin at $3 and you have billions of dollars of assets lying around and you get zero return on them in terms of yield to pay your lifestyle. I can see why people want to, and you can do it in a pretty safe way. And there's a few platforms that do that. So I get it. For big holders, for financial holders, banks, asset management firms, I can see why they do it. It's not my preferable path because my rule number one is don't lose control of your tokens. And any leverage in some larger drawdown means that you end up getting taken away and your coins don't belong to you anymore, and then you're out of the game. And that's, if it's going from 3 trillion to 100 trillion, rule number one is don't get out of the game. Or don't get taken. From a philosophical level, is it right for one entity to control all the Bitcoin? Okay, that's something, if you're true to what Bitcoin is about, there should be a limit where you say, well, I don't need to do that. But let's assume that he doesn't blow up because of the leverage, because the cost of borrowing is zero for him, and he's got enough assets to cover stuff. Yes, some assets might have to get sold, whatever. I worry more about the leverage it creates in the system, because MicroStrategy is trading at a huge premium.
Mm-hmm.
That premium is somebody else's arbitrage. And so whether they're buying Bitcoin selling MicroStrategies or buying the options from the convertible note and that are very cheap and selling more, somewhere within that system is an enormous amount of leverage happening.
Yep.
And I don't worry so much about MicroStrategies. I worry about the unwind of the other side of the trade. Because people focus on the MicroStrategies because it's flashy, but this is what happened with Grayscale. Grayscale was trading a huge premium. People didn't realize it was creating gigantic leverage, and everything was one trade, and there was one big customer, 3 Arrows Capital.
Yeah.
And when they were forced out of the trade, it took everybody down, including Genesis, who were the arm of Grayscale.
Bitcoin has recently experienced notable fluctuations, marked by considerable liquidations within the futures market. Since December 5th, the cryptocurrency has experienced 2 significant events, resulting in over $1 billion in liquidations during each occurrence, leading to pronounced price fluctuations. On December 9th, a significant decline was observed as Bitcoin fell from $143,000 to $94,200, resulting in a loss of $2.9 billion in leverage positions. In light of these disruptions, the adjustments within the derivatives market indicate a more robust foundation that could support potential upward movement. The market has experienced advantages due to a decrease in excessive leverage, a variable that has been historically associated with increased volatility. The open interest in Bitcoin futures has experienced an 8% decrease from late November to mid-December. Additionally, the perpetual contract funding rates, which reached a high of 9% per month on December 5th, have since returned to more typical levels following the recent correction. This transition indicates the departure of excessively leveraged retail traders, setting the stage for a more stable growth path supported by institutional accumulation. Institutional investors are significantly influencing this transition. Since October, Bitcoin ETFs based in the US have seen inflows totaling $15.2 billion, highlighting the increasing attractiveness of Bitcoin as a long-term investment. Prominent corporate entities such as Microstrategy, Riot Platforms, and Marathon Digital have increased their asset positions. In early December, Microstrategy acquired more than 21,000 BTC, investing $2.1 billion, which underscores their strategic confidence in the long-term potential of Bitcoin. The derivatives market reflects a positive outlook, with call options indicating a projected Bitcoin price of $111,000 by February. This indicates a transition from a predominance of speculative retail investors to a more stable environment driven by institutional participation. Historically, such transitions have been indicative of significant rallies as a more balanced market structure begins to take shape. The macroeconomic fundamentals surrounding Bitcoin contribute positively to the optimistic perspective. The asset continues to serve effectively as a safeguard against inflationary pressures and economic volatility. Moreover, the growing incorporation of this asset into conventional finance through exchange-traded funds, institutional investments, and advancements in regulation reinforces its status as a prominent asset class. Forecasting future movements, Bitcoin's path seems set for significant gains, with the possibility of surpassing the critical $100,000 threshold in the near term. Should prevailing trends continue, the cryptocurrency is positioned to reach notable milestones in 2024, driven by institutional adoption, decreased leverage, and strong investor sentiment. This positions Bitcoin to solidify its role as a fundamental component of the digital financial landscape. Let's back to the Raoul Pal interview.
Right, so they didn't see it coming either. Nobody knew there was one customer, and that's very typical of a leverage blowout. So we're creating fragilities in a system. The other issue that I've got is there's the 2 times levered Microstrategies ETFs. Everybody's trading those. That's causing probably a large part of the premium, plus a bunch of Europeans who can't buy Bitcoin in their pension plans, so they buy. So there's a bunch of premium being driven by this stuff. But what happens when the market turns and the 2 times levered guys sell?
Yeah, boomerang's
It comes
back.
twice as fast in an illiquid market to the downside. Before you know it, MicroStrategies is trading at a discount to NAV. That blows up all of the people who've been in the arbitrage trades. There's all sorts that can happen that people don't think about. And I've been in financial markets 34 years, and I've seen this repeat and repeat and repeat and repeat.
Well, we've seen it with, what was it, back in Germany in 2011, the automobile company.
Yeah,
I don't know the
Volkswagen.
name. Yeah, it happened the exact way around.
Long-term capital management, exactly the same. That was
Yeah.
so big that the Fed had to cut rates because it was such a mess.
Really?
Yep, it happens endlessly.
Ethereum encounters significant hurdles in its pursuit of the ambitious $5,000 target by year-end, as market indicators reflect a cautious outlook. Derive's on-chain options protocol indicates that the likelihood of Ethereum achieving this target has decreased to slightly above 8%, a decline from a high of 16% observed earlier in December. Reaching this milestone necessitates a substantial 37% increase from the current trading price of $3,669, representing a considerable challenge as the year concludes. Despite this, the market is exhibiting compelling dynamics. The analysis of options trading data indicates a balanced sentiment, suggesting a neutral position among traders. Nevertheless, prominent figures within the cryptocurrency sector continue to express optimism. Pseudonymous trader CoinM maintains a bullish stance with a year-end target of $5,000, sparking discussions across various social media channels. The recent inflows into Ethereum ETFs indicate a significant uptick in interest from institutional investors, reflecting a shift in traditional finance's engagement with digital assets. On December 10th, a total of $35 million was allocated to Ethereum ETFs, with Fidelity's Ethereum Fund receiving $22.2 million of that investment. Experts such as Eric Connor and Anthony Sassano interpret this accumulation as a possible indicator of an impending supply-side crisis, where rising institutional demand may put pressure on the available Ethereum supply, potentially leading to an increase in prices. The structural growth of Ethereum supports this positive outlook. The network has shown a strong capacity for resilience and adaptability, achieving record-high weekly closes in 2024. Furthermore, Ethereum's critical position in decentralized finance, DeFi, and its leading presence in NFT ecosystems strengthen its intrinsic value. The network's shift to Ethereum 2.0, emphasizing scalability and energy efficiency, has solidified its status as a premier blockchain platform. In the future, Ethereum's capacity to maintain upward momentum is likely contingent upon various factors, such as macroeconomic conditions, the level of institutional participation, and the ongoing development of its ecosystem. Although the $5,000 target may seem ambitious, Ethereum's medium to long-term outlook is promising, as its strategic importance and market demand are expected to fuel significant growth in 2024 and the years that follow. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.